day for me starts like this. For starters, I only use one screen. I don't have multiple screens, and I'm not looking at multiple time frames. I don't like a lot of noise, so I divide everything up. Once I enter a trade, I put it into the month category. I have a triggers category, so when I'm searching through stocks, and I see that they're close to resistance, but not quite at it yet, they go in my triggers list. And this is what I mean by keeping it clean. I dilute down the actual trades to now based off if they're absolutely ready to enter. CBOE, first entry, second entry. DOX, here's our first entry, and now we're up against resistance again for a second entry. Monday, ready to take a first entry. Here's our double down. MRVI, first entry, and second entry. OGN came up into resistance, first entry. If it comes back up to this higher high, that would be a good place for a double down. You love to see this one, SAVA, first entry against resistance, second entry, double down at a higher resistance level. So that's the way I filter out in my charts. I want to know if it's close or if it's an actually buy now. On to the searches. Here's a rundown based on time, how we use these searches. Bazinga is pre-market, so that's around 9 o'clock. I look at the pre-market gainers to see what I could sell off. Because this is sell the news, I'm looking for things close to $30, like this one Zip I found this morning. I hope for it to be over 5%, but if we get in on the second day, it's not going to have the same up run. Once I see that everything lines up, I click on it, take a quick look at the chart, seeing that we're in an uptrend, definitely coming into some resistance. Now I'm going to check the news and make sure they weren't bought out. After that, I'm going to put the ticker into my Thinkorswim to make sure it meets my rules up against resistance with the preferred IV over 5. There's lots of ways to get a pre-market analysis on Lovers Losers, Thinkorswim. They have these different categories here: post-market, pre-market. So I'll scroll through this pre-market to look at the charts, like Upstart, not quite to our resistance line yet, nor this one. So I save that one in triggers. Once it gets to 9:30, I'll usually just look at all my positions just to make sure they're still in that resistance levels, check and see the IVs selling off. As long as everything's good, I just keep scrolling through. Okay, and not okay. So obviously we use these highs, took the trade right there, and now price is higher, so I got to figure out what to do. Well, from these lows up to our highest high gives me a resistance level right there, which is pretty close to our 2.5 standard deviation. So I'm going to color in my DD box right there, and unless price goes up into that DD box, I'm not going to do anything. Now I know what I'm going to do with this trade in the future. IV is selling off nicely, so with some time decay and price moving back down to break even, we'll be fine. And so that happens after the market opens. Once I'm aware of what I need to double down on, I keep the process going, looking at trade views gainers. When I'm done with that, if I haven't found anything, I'll go to trade views sectors and industry. Trading view, US stock market, market movers, top gainers. I love this one because it already sets the top percentages in order for you. So all you have to do now is just scroll down, find something near $30, and again, and again, and again. Click on the ticker. Here we have a high with a current higher high. So I would assume that we probably have some kind of resistance here. Keep scrolling down, look at the news, and make sure they weren't acquired. Do this all the way down to 5%. Next search is sector or industry. You can search through the sector first, and when you're done, come back and check for the industry. I like to double click on percentage change, and this will tell me where the most money's going in the market today. With these being the top 3, double click, and here's the top 4 companies for this sector. Same way with industry, double click. Top 3 industries, big money's buying right now. Double click. Here's the top 3, but you can see this is under 5%. Let's see if yesterday they had a big run. Exactly. So this is still a buy because you can see this big bullish run right here. Sell the news, making higher highs, looking for a resistance. Make sure they weren't acquired. Scroll down news. Nope, everything looks good. Type in the ticker. You can see long-term resistance. Not quite there yet. We do have a dividend coming up, so we need to be careful. And maybe by the time it comes up into this resistance, we would have passed by the dividend to be able to get into the downside. So I'm going to save this into triggers for a later date. In order for a ticker to get into the now box, we have to have a couple things. I want at least 2 confirmations. Either one, a channel resistance line, and or a standard deviation. Check. So that gives me 2. I also filter with a divergence, which you can see pretty much matches up with my trend line. A little bit weaker signal would be a sequence counter, color change in the candlesticks, or the break-in trend line. But we'll talk about not entering on red candles because we want price to be going up to get us into the option before falling off. As you can see, the divergence and the channel are going to routinely show up because they're using higher highs. That's why you like using the standard deviation, because it gives a different calculation. If you find yourself having more than 10 tickers, then increase the filter to at least 3 clear signals. Take as many options off the table as you can when considering the trade to be a right now trade. It's about better trades, not more trades. So now that I have my list of trades I could take right now, I come over to my trade tab, enter my list, have the correct month opened up, make sure I have verticals on, looking at the calls, and of course the bid side at the money. So I keep looking through my list one by one to find the spread that will give me a 1-to-1. This is only at $2.55, so I know the midpoint's going to be lower than that, which won't give me a 1-to-1 ratio on a $5 spread. Here we are on Docs. 320, I like that. $5 spread. So we're probably close to that $2.50, 1-to-1. There we are, Docs, $5. And option makers are giving us a 1-to-1 deal. So this looks like a prime trade for me. But I'd really prefer that today's price was green instead of red. Here we are on Monday. You see a huge spread of almost $12 on a $10 strike. So the break even's probably around $5. Let's look. Remember, it's got to be red. And here we are at $5.35. This is giving us better than a 1-to-1 with a big green up day. We like that. We have a $5 spread, and we can see that price right now is at $5 to $1. And so the midpoint would be about half of that, which gives us $3.10. That's a great trade, with the price almost up 5% today. The great thing about trades like this, $1,900 max loss compared to $3,100, is you can take half of the trade off at your 50% target and then let your winners run. I love trades that are better than a 1-to-1 ratio. This also gives us a $58 break even, which is nice because price is under that right now. At the money, $5 strike. We see that we're at a spread of 2 to 250, so that probably gives us 225. It is up a little bit today. It was up a lot higher yesterday. If you wanted to take a trade like this, just increase the price from $2.25 up to $2.50. Don't forget GTC, and you might have to wait a little bit. I like this trade here. We got a spread of $2.70 to $3.80 on a $5 strike, which is great, meaning that we can get in better than a 1-to-1 ratio. Risk, $1,750, $3,250 reward. Again, you're going to take your first target off at 50% profit and then potentially let your winners run. The break-even price is $33.25, which is a little bit higher than where we are right now at $34.20. Not too bad for the risk to reward. Last but not least, we have a $5 strike. Spread's a little bit big, but in the $2 range. So currently this is at $2.50, and we don't like that because it means that we'd have to risk $2,850 max loss to get smaller than a 1-to-1 ratio, $2,150 max reward. Break even is $122.15, which is just a little bit under our current price, and it's moving up 2% today. I just want to leave you with the last emphasis of not getting into a trade when price is coming down, especially if you're wanting the price of the spread to go up to $2.50. It's highly unlikely. So make it a rule to only enter in down trades when the market's going up. I know it seems crazy, but you're never going to hit that tippy top at the perfect entry place. And of course, that's why we use double downs, as you know. The last search I just want to go over is the weeklies. I do this at night or on Saturday. I basically click through every chart at least once a week, but not every day. Because like here, you can see we're so far off resistance, and especially this higher level of resistance. Again, we're off resistance. And so it's kind of a waste of time. I mean, Citibank would have to move up 20% just to come into this resistance level. And so obviously if that happened, I would probably see that on the percent gainers or a pre-market move. And again, and really with every search that you're going to do, you have to figure that you're going to get less than 10% of everything you scroll through. So like on the weeklies, there's over 500, meaning you're going to get less than 50, and that should be okay. We don't need lots of tickers. We just need really great ones. Out of the 16,000 tickers out there, you only need 1 or 2 a day. That's like what, 0.5%? So there's a lot of searching that you're going to have to filter through to find the best trade setups. But lean on the chat room. We'll bring up great ideas and you tell us yours. Let's help each other out.